Yo, 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 what's up, amigos? This is going to be an addition to the coronavirus sector. We're going to talk about potentially the upcoming impact. As some of you guys know, that they reduced the rates. It's down to 5%, 0% to 0.25, and that's a big rate cut. And recently, they did a rate cut here. The market did not like it. I think the timing was off. So that's what the video is going to be about. It's going to be a quick one, and some of it's going to be repetitive, the other videos in the section, or maybe an add-on to it. So that's what the video is about. Click like and subscribe if you think this stuff is useful and it helps you. So, thinking out loud, I knew for a fact that, well, I did know, because I did take a short position on the market after the after they announced the cut. I personally thought it was premature. They were trying to solve a panic mode, a fear mode with financial problems. So everybody was nervous and scared about it, and there was going to be an economical impact. And it does make sense that they're trying to just be ahead of the curve. I guess that's what their mindset is. But the market, I think, also takes it as well. It takes it as that they're afraid. They're afraid slash worried. Like Powell is worried what's going to happen to the market if they don't do anything about it. So today, so that's what happened, I believe, around here or here. I don't know the exact date, but I took a short, and I was actually short, full disclosure, I think I was short from January, February, around this area. And I had a swing short position, all the way down to, I had calls in UVXY, all the way, what the heck, that's weird, I don't know why it's doing that. I had a call for a few months out. I had a call all the way to, I think, August and November. I had a few calls. I think the UVXY price was around 10 or 11, something like that. 10, 11, yeah. And yeah, I sold it a bit early, made quite a bit of money, but that's not the point. So the point here is the SPY and the future. So they did a rate cut. The market didn't like it. My perception is that they didn't like it because they thought something bad is happening, and as you guys potentially know, that a lot of companies were leveraged. They were not performing. It was overextended in terms of value, and there was a lot of constant buying for 10 years or so. Everybody was buying the dip, and it's been working. And whenever something works consistently, the market tends to once in a while do the opposite and really get them in pain. So almost always it was actually defended around 20%. The SPY always got defended, and I think 20%, if I'm not mistaken, if I remember correctly, was 272-ish or 270s. That was 20%, so I think they probably tried to defend it a bit before, pushed higher, and then there's probably dip buyers here trying to buy, dip buyers here. And sadly this happened, and now the Fed's cut the rate to 0%. Haven't seen that in a while. And in my personal opinion, not a financial advisor, I'm just speaking out loud for myself. and anybody else that may benefit. I think moving forward, if this doesn't help the market, I personally am, I think it may not help, but I'm always trying to think even the opposite side of my perspective. So if this does not work and the market does not gain confidence that it's going to go higher, that massive rate cut would be seen as in like a true fear that, like, why did they cut it to 0%? We've never, as far as I've been trading in USA, I don't think I've seen 0%. I've been trading for 12 years plus. So that's a big danger. Because I think, I hate to say it, but there's going to be quite a few companies that are going to go bankrupt because they're extremely leveraged. They have a lot of debt, and if they can't meet the obligations, and given the coronavirus, the quarantine, and things like that, they the money's not circulating, things are not working out, and there's no point in having cheaper benefits. So it's like you owe, theoretically speaking, you owe $100,000 a month if you're running the company. It's something, the million, the number doesn't matter. But then all of a sudden, somebody says, yeah, you could borrow more. You can't make your obligations to pay that 100K in interest or in outflow, cash outflow. And then somebody says, listen, you could borrow another 10 million for 0% or 0.25. It's not really gonna help. I mean, I could see it helping, but we're talking about the negative and we'll go to the positive. It's not gonna help because you still have to make that payment. And if people are locked inside quarantine, which I think is beneficial, but we're still looking at that side. In that scenario, there's no money circulation going on, so that will potentially backbite, and there's no real benefit of having the cheaper cost to borrow, the cheaper cost of capital. I mean, it does help in other aspects, like some companies could potentially. So now we're going to the positive side. That 0% cut rate, 0 to 0.25. What it could do is some companies that were borderline and they were like going to declare bankruptcy, and they could stay afloat a bit longer. But the scary part is if the unemployment rate comes in to be high, or the Q1, Q2s are really bad and their demand projection is bad. So these companies that stayed out a bit longer, borrowed a bit more money, will have more of a snowball effect. Then, in my opinion, then the companies will go bankrupt a lot more. So it is of my opinion that it may, I think it will have a negative effect in the market. I've just started the long position. I'm like 1/10 long yesterday. I was ideally looking to scale in from here to like 50%. But I don't know, this rate cut made me change my mind, so I may cut that. So this is the thought process on the cut rate that happened today and the last cut rate. I think what the solution, in my newbie opinion, I have zero knowledge about coronavirus, or I'm not an expert by any means, even on this economical stuff. I'm nor investing for a matter of sake. So, but it is of my opinion. If you were to ask me, I think the market would have liked it a lot more if there was a funding towards. If they said, listen, us and the UN are going to get together and we're going to build a super duper team where anybody that has coronavirus will get shipped out there, they'll get treated, everybody's united, and we as US are going to put $500 billion or $100 billion, and the other country is going to put that, combine all our resources together as a developing nation and things like that. But I think that would have been a lot better, because a lot of countries are hurting, as opposed to this package that's supposed to gives easier access to capital. So that's my thought process on it, and I think I'm gonna make another video. If you guys are interested, why I shorted the market at around January, February, and like how I made, I think 5,000, 6,000%. But also gonna talk about how I could have made more, the hindsight was, and what the thought process is, um, and maybe I think I have some questions about implied volatility and things like that, and maybe how to play the market on the upside really strongly. So if that's something that you guys want, put in the comment below. If you liked it, this was beneficial, uh, click like and subscribe, share it with somebody. That would mean a lot to me. If somebody, if it goes bad, like, don't don't go don't go against me. But if you find it a little beneficial, share it with somebody if it helps. Because there's no way in hell I'm gonna get paid from YouTube. So it's good hearing that like it cleared up some air, things like that. So have a wonderful day, guys. Take care. Bye.